Hey everybody, it's Ron from Ron's Basement. Thank you for joining me today, and wow, what a week in the gold and silver market. Today is January 22nd, 2022, and hey, I'm a little rattled, and I know a lot of you are going to give me a hard time and say, oh, you can't be so emotional, you can't, well, I'm rattled after last week, being kind of heavily invested in the mid-tier and junior mining stocks. It was like, I mean, what a great, Tuesday, whatever. Wednesday, the price of gold kind of skyrockets, right? The mining stocks are all up 10%. You're feeling optimistic again. And then, I don't know if you watch Charlie Brown, but it's like the old Charlie Brown, Lucy, he goes to kick the football, and Lucy pulls the football, The market pulled the football, pulled the rug out from underneath us. I'm up a little bit, my portfolio from where I was last week, but nothing like I was on Wednesday. And this seems to be happening over and over the last, let's say, well, for me, I've been really back into the mining stocks for the last 7 or 8 months, but I know even prior to that, the market was kind of correcting and going back. My thought on that is that most people, I don't know how you feel about this, but I think that most people at this point, there's been so many of these circumstances where the rug's been pulled and people are like, I give up on this, that most everybody who is going to give up, not everybody, but most everybody has probably given up on mining stocks at this point. And those of us that are left, the few, the proud, us, are some pretty strong hands. And on top of that, we have 1836 gold. I don't know if you saw, but after the market closed last night, I don't know, they still trade gold for like another hour or 2 hours, and it actually closed at 1836. I mean, that's an amazing gold price for these gold producers. And silver had a great week. Let's not forget about silver. Silver had a great week. So, these valuations, again, not that on Wednesday they were even close to being fairly valued, but the valuations, again, are at ridiculously low levels where you're buying, the stock, the market caps of the company are oftentimes less than the assets of the company after you take out the debt. It's really crazy. I was going to make a tweet. I was kind of joking around like, at what point does the market recognize the value in the mining stocks? Is that when they all have no debt and their cash on their balance sheet is more than the market caps? I mean, I don't know. It's crazy. Look at the GDXJ, okay? It's about 40, okay? Pull up a GDXJ long-term chart. Back in 2016, the GDXJ was at 50. Today, it's at 40. In 2016, when it was at 50, gold was like $13.50 an ounce, almost a full $500 less than it is today. So gold was $500 cheaper in 2016, but while gold was $500 cheaper, the GDXJ was 25% higher. Now, these types of comparisons, I've done them many times in many situations over the years. They never work out in the time frame that I like. But nonetheless, I think that's worth bringing up. Who knows what's going to happen next week? There's another Fed meeting. There's so much going on and so much uncertainty. It's almost, it really is difficult to wrap your head around. Even my head. I don't know if you can wrap your head around it, but it's hard for me to even think about wrapping my head around it. Next week, the Fed is meeting. You've got the situation with Russia and the Ukraine. You've got midterm elections coming up. You've got inflation. You've got this huge national debt, right? $30 trillion. You've got huge deficits. You have inflation. You have supply chain. It's just, maybe that creates the perfect environment for gold. I did predict that in one of the months, starting with the letter M, that would be March or May, I had a vision that gold would be a vision. It's the only vision I've ever proclaimed. I had a vision that gold would go to $2,400. Well, see if that one plays out. But with all this uncertainty, all this stuff going on, I mean, it's like, it's crazy. And, you know, I was thinking the other day, I was like, so there's no more stimulus, right? All this money that was being given to people during the pandemic, these $3,000, $2,000 checks, whatever it was, all the child tax credit, that's all being taken away. So there's less money in the pockets of kind of middle America, people that spend the money. But at the same time, there's a reduced number of goods in the market. And, you know, I was trying to wrap my head around how all this might work out with inflation. And it's mind-boggling, right? I mean, there's all these, on a different subject, reverse repos going on. I don't know, 1.7 trillion a night, and, you know, all this money, excess money that's sitting in the banks and in the market. And, you know, I was thinking that even with this reduced amount of money in the, you know, from the stimulus given to individual families, there's also reduced goods and services because of supply chain disruptions. You know, it depends where those two kind of balance out. I mean, the reduced stimulus payments are going to be anti-inflationary. I don't know. It's really an interesting time. But I think maybe the fact that it's so confusing right now, maybe that's uncertainty. I think gold likes uncertainty, right? Isn't that what we've heard? You know, it'll be interesting to see what next week, how it plays out. I have a feeling that you know, gold's not going to be 1836 next week. It's either going to be pretty substantially higher or pretty substantially lower. I'm hoping for higher. And I think higher is a reasonable expectation. But I could be wrong. I could be sitting here next week talking to you, telling you that, you know, gold's still at 1835, but that's still a great price. And the price of silver is a great price for silver right now. So for that, we can be grateful. The other thing I forgot to mention in my previous monologue or long-winded explanation as to why things are so confusing and there's so many moving parts right now is the labor shortage. That's a serious problem. And that's inflationary, right? So it's like you got people with less money, people don't want to work, you have less products, right? Because there's supply chain disruptions. You know, less people working, that drives up wages, which you're hearing all the big companies talk about. That's inflationary, right? And that also affects the amount of goods and services that can be produced, and it also affects the GDP. You know, it's almost like, and you've heard this a million times, but it's like the Fed's going to have to look. I mean, it's almost like, it almost, to me, and I'm not going to say I have a vision about this, but it feels like at times like the stagflation thing is a real viable scenario that could play out in the near-term future. That, you know, the economy starts to stagnate, there's less goods and services being produced, the consumers have less money. There's a stat that came out this week that people are spending more and more on their credit cards, right? That only can go on for so long. Less goods and services, less people working, that we could have a stagnant, like the U.S. economy could start to slow down, which there have been some signs of that. And on top of that, inflation could continue to go up because of supply chain disruptions, increase in the products that are being produced are going to be being sold at higher prices. I don't know. It's all, I don't know how you feel about it, but it can be a little overwhelming at times. And here's the bottom line. Nobody knows what's going to happen. Not me, not you, not some guy at Citibank or Goldman Sachs. Nobody knows for sure what is going to happen. Anyone who purports to you in some authoritarian type way that they know what's going to happen to gold or the economy or anything in the market over the next 3, 6, 9, 12 months is most likely trying to sell you something. And we humans, we like that. We like to have some, you know, I mean, hey, I'm human, right? I like when I hear that Goldman Sachs says gold's going to 2,400 or 2,800, whatever their prediction may be right now. I have no idea what it is, but we just like that. And the reality is Nobody knows, right? Those guys were predicting $3,000 gold not too long ago, and we all know that didn't work out. So trust your own instincts, okay? And most importantly, don't invest money that you can't afford to lose, especially in the mining sector. You've got to be prepared for, unfortunately, potential, drawdowns. You can also be prepared for spectacular gains, right? But don't invest with money that's borrowed. Don't invest with money that you can't afford to lose, either financially or even emotionally. All right, guys, thanks for watching. I hope you enjoyed my video. Have a great day, and we'll see you soon.